I'm just starting my record button here, and then we'll get right into it.
Fabulous.
I'm
and
surprised.
I'm a little tired, so
I bet.
if I like not making sense, we can just let everyone know it's been a long day.
Exactly. I just had my students leave, so they're at the door. The bell just rang, so same thing.
Fabulous.
All right, so I'd like to welcome Carol Roth to the channel. She's a self-described recovering investment banker, but she's also a television personality, New York Times bestselling author, strong advocate for market reform, and I think she might have invented penicillin. I'm not sure, but she does it all. So welcome to the show.
Thank you. I usually get the Roth IRA joke, but I'll take penicillin, which for full disclosure, I had nothing to do with.
No, I'm sure you've had a lot to do with a lot of things, but that's way beyond our time. So, Carol, your new book is called The War on Small Business, How Government, oh, there it is, How Government Used the Pandemic to Destroy the Backbone of America. I'm glad you have a copy. I can't get one yet, but I was hoping you'd have a picture.
Yeah, it's a nice thing they do for the authors. They let us have the copies a couple weeks before everybody else. It's one of the perks of writing the book.
So why should people read this book? What are they going to learn?
So if there's anything that was completely underreported in the last, call it 14, 15 months, but really the last decade, it is what's happened around small business and economic freedom, particularly here in America, but I know you're in Canada and it sounds like it sort of happened there. And I've had people from Nigeria and other places say it's happening there. But basically the government decided that it was going to choose winners and losers and decide who was essential and who was not essential. And in retrospect, we can all see that clearly was not based on science, that was based on political clout and connections. The outgrowth of that is there was a massive consolidation of power and in particular the US of wealth. We saw transfer from Main Street to Wall Street. We saw transfer from the little guy to the big guy. 7 tech companies in 2020 gained $3.4 trillion in value, while millions of small businesses were either shuttered forever or hanging on by a thread. It was a record year for IPOs and SPACs. People were put out of work. You can see the disconnect there. So in buying the book and reading the book, you're not only going to understand kind of the long-term trajectory about everything, central banks and the Federal Reserve, relationships with China, just kind of the role of government and cronyism and all those good things. And you're going to get the tools to be able to spread and advocate, more effectively. But most importantly, you get to advocate for small business and for the stories and the little guy to be important, because part of the thing is nobody wants to report on it because they don't think anybody cares about it. And in the US and around the world, it's the backbone of every single economy. 99.9% of all businesses in the world are small businesses. So if you don't want there to be just like 12 businesses left in the world and everybody working for them and the politicians, you need to make sure that you let publishers and media outlets know that this is important and vote with your dollars just like we do with everything else.
Definitely, and I think the only people that benefit from there being 10 businesses or 6 businesses are those businesses, and we're seeing that more and more.
And the politicians that enable them, right? It's the cycle of cronyism where you scratch our back, we scratch yours. Much easier if you're a politician to deal with a couple big businesses than with millions of independent individuals or small businesses. And that's part of the thesis that I lay out.
So when you talk about cronyism and you talk about politics, are Wall Street and politicians just too intertwined? Is it a system where to run a political campaign costs billions of dollars, and guess who has that? Billionaires, the big firms. And so we've got this sort of theater where they get hauled behind, in front of Senate committees and other things, and they go, oh, you guys are doing really bad things. And then they go back to doing bad things. There's no real consequence ever except a slap of the wrist. Here's a fine for $250,000 after you made $2 billion. So is it really, is there a chance for regular people and small businesses, or is it just a bit of a farce?
Yeah, so that's where, I kind of look at a spectrum. If you think about free market capitalism, which I just basically say is free choice. It's all of us making choices that has a basic construct of rules that protects individual rights and property rights. But, nobody, the referee there is just enforcing those. He's not tilting the playing field in any way. Yeah. And then on the other side, you have complete force and control, which is, call it what you want. I call it central planning, but you could call it socialism or communism or whatever name. I don't want to get into the semantics, but like places where there's smaller people making the decisions, and there's force and there's control and there's centralization. The further we get towards those people having more control and making those decisions, the worse the outcome it is for the individual, and it becomes a self-perpetuating cycle, as we've seen. Because like you said, who's got the money to give the big campaign contributions? And then when you go to have legislation, who's there to write the legislation? And we see it happen time and time again. The example that I've been using, because I use it in the book and I think it's just so clear, is during the last financial crisis, and that happened starting in the US, the Great Recession financial crisis, everybody said we have to rein in the banks. We gotta legislate them, and they came up with this crazy legislation, Dodd-Frank. And not to say that every aspect there, but actually some good things have come out of Dodd-Frank. But the sum total of what they did was they created anti-competitive legislation that actually reduced the number of small banks. So if you look at the period after it was enacted, I think it went from an average of 100 community banks and small banks being formed a year to 3 per year. A lot of people went out, smaller banks went out of business, and the amount of small business lending then took a huge dive, because the small lenders are the ones lending to the small businesses, not the big banks lending to the small businesses. And then the amount of lending to the big companies went through the roof. So you were trying to rein in the big banks, and then you gave them free rein. And that is the sort of vicious cycle that ends up happening when you let the politicians control too much.
Well, it's half a dozen of this, 6 of another, right? So
right.
Talking about just the movement and the little guy and government, even today, since I sent you questions and talked about what we might talk about, I saw all over the news, I guess, hints at just that accusation of collusion among retail investors. The whole, we're looking for their leaders. Yesterday there was an Ape Day. I've been in this for months and months, done so much research, never heard about it until the media started saying it. And then that infiltration, that let's hire a telemarketing firm out of Bangladesh and get them to get in these Reddit forums and use accounts and make these things up and get them to catch on, so then we can point the finger and go, look, they're colluding. Those retail investors, those horrible, what were they called, the retail mafia? I think. It was crazy.
Disgusting. It's disgusting. And that goes back to the lack of political expediency that the small guy has, and why this push for decentralization is so important, whether it's small business or a gig worker or a retail investor or somebody who's interested in crypto. This is why these things are happening. The fact that they would even consider going after the retail investors, and look, I'm not into pump and dump schemes, but you can do a little bit of research and you can see that even if you don't agree with the thesis, that there is a bigger movement and a bigger purpose behind what's happening here. And to then say, okay, well, we're going to target the little guy, instead of going, okay, we see that there's a problem, with the markets, and we're going to fix it. It just underscores everything that we're talking about here, right? It's just how completely intertwined this sort of political big business special interest triumvirate is, and why the rest of us need to be advocating and sticking up and saying, like, no, this can't happen. And this is what I will tell you guys, in terms of any of you, if you're out promoting the stock because you own it, things to cover your behind disclosure, I own the stock. So say that I don't, this is not a disclosure, by the way, because I don't want to be conflicted as I'm talking
not an
about
ape?
you guys. So from a conflict of interest standpoint, I do not own any of these stocks. But for you to say, when you post on social media or whatever, say disclosure, I own, a long position in the stock. And this is not financial advice. Do your research. Just put little disclaimers in to cover your behind, because I am very concerned that somebody who's gotten burned is going to want to make an example, so this doesn't happen again. So the best thing you can do is use those same languages. Just like when I go on financial TV, if I own a position in a company, I'm supposed to provide that to the producers, and they're supposed to put the disclosures up for that, because otherwise there is that perceived conflict of interest.
Definitely. And I know I own AMC and I own GameStop. Not a lot. I'm a single dad. I can't afford a lot, us big retail mafia. But really the movement was about first just investors getting in the market. I'm new to it and I did a lot of research, and then I saw GameStop and I thought, wow, that was a lot of money people made. And so I looked into it. And once I started learning about just the conspiracy, I don't know if it's the right word, I sound right away like a conspiracy theorist, but just the concerted effort to really go after companies. It's a strategy. It's a short strategy to look at companies that are weak and attack them. And if you can drive them into bankruptcy, you'll make a lot of money. And so we just flipped that premise and said, well, we like GameStop and we like AMC, so let's pick those and let's buy them because we do like them. And let's squeeze that price up to punish the short sellers, because they're hurting companies that we really do value. And do I think AMC is worth $100,000 a share? No, but I don't think any company is. I don't think Bitcoin is, right? But at the same time, it is worth the worth we give it. And at the end of the day, if it squeezes and it goes up and then it drops back down, it's still going to be worth more at that. It'll have a higher baseline, a higher floor than it did before, I'm sure, and the company will benefit. And we will reinvest into that company. I'm sure most of us, not all of us, but I will.
So I want to say a couple things about what you said, which I think are genius. First of all, risk has been completely disrupted in the market by the Federal Reserve. The Federal Reserve has $7.9 trillion sitting on its balance sheet. I won't give you all a lecture on the Federal Reserve, but Chapter 5 of the War on Small Business is basically called Selling Main Street Out to Wall Street, the Fed's decades-long role in helping transfer more wealth to the wealthiest. So basically, they have disrupted risk. It used to be that we knew what valuations of companies should be. There's so much money that's been pumped artificially into this market. Interest rates have been bastardized to the point that they're so artificially low that people are taking crazy risks and seeking out yields anywhere. So like the fact that you're saying, oh, well, like AMC's valuation doesn't make sense. Well, like nobody's valuation makes sense. Like, there are a handful of companies maybe, and some of those that are under the radar, which we'll probably talk about later, but is Amazon worth what they say it is? Or some of these biotech companies? Like, just risk has been disrupted, and that's the Federal Reserve's fault. So if you want to start pointing fingers, let's talk there. The second thing is that I want to say that I've been really impressed about, and I think is so important, is like you said, you did your research. Like you're learning about the market, and this is what I fundamentally don't understand, because true capitalism, true free markets is a win-win enterprise, and the market expands, value increases, and there's enough for everybody to have. One person's bite doesn't come at someone else. So encouraging and empowering the next generation, next couple of generations of people to learn about the financial markets and to participate in the wealth is a great thing for everybody. I fundamentally don't understand why people aren't looking at this as an incredible opportunity. Like, finally, we have people who want to learn and want to participate, and we're going to thumb our noses and call them dumb money. Like, no, get out there, listen to what is happening, and be accessible and teach everyone. And while I don't agree with every mechanism or every thought people have or conclusion they've drawn, they're learning. So teach them, what makes sense, and then figure out what the issues are and try to create a more like this is a win-win situation. The fact people aren't, treating it like that is insane. And the third thing I'll say, and then I'll let you talk, because I know you guys think
problem.
I talk too much, which I do.
No, this is great.
See, the problem is I get on TV, I get these couple second sound bites. So when I get in podcasts, I like vomit
Just let her
information.
rip.
But what I do really hope is that as you've supported these companies, the AMCs and the GameStops, I hope that their management team will rise to the occasion and say, you've given us a new lease on life, and here's our new plan to go to the next level. I mean, what an amazing thing that you've done for companies that in some cases had been left for dead. You've given them another opportunity. Now they're going to have to earn that from you guys for you to stay with it over longer periods of time. But what a great opportunity you've given them.
Yeah, and I think there's been some controversy around Adam Aaron, especially in just share offerings and timing and just sort of, I don't know, shooting the idea in the foot about naked shorting. Like, there's legal things, I'm sure, but at the same time, this is a guy that went publicly last year saying, my company's being shorted to death, there's manipulation, it's out there, but now suddenly he's silent. And to me personally, I'm not speaking for anyone else, I just find that a little disingenuous. But hey, it is what it is. I think with the amount of energy we put into researching this squeeze and everything else, imagine putting that same amount of research and creativity into ideas for AMC or GameStop and what they could do together. So I'm seeing that out there, and I hope they do take it to heart. When you look at the idea of the premise, I guess, that there's manipulation, that there's a concerted effort by Wall Street, we'll say, I won't name names, I don't know who they are really, I don't think anyone does. We have some, right, we have some suspicions, but who knows? But the fact that when there's billions of dollars to be made, tens of billions, there's a lot of incentive to break the rules, to just break them, bend them, do whatever you can. And history has shown there are cases of this. There are cases of, what did Wes Christian call it? Death spiral financing. And, and he has lots of experience with it. I'm just learning about it. But in your experience, are the apes all crazy? Are we all wearing tinfoil hats and we're just like seeing things really out there when we see a billion shares in volume going back and forth? Yes, there's high frequency trading, but that in itself, is that right? Is that manipulation? The fact that when 80% of the owners of the company say, we're holding, we're not selling, where are all these shares coming from? And how can that change the price so much when the vast majority of the owners aren't selling? Like, it just seems counterintuitive to my little ape brain that people can hold on to their stock, like the vast majority of it anyway, and only a small percentage even gets sold, and yet the price can go drop. Like, it should, if anything, the price should be just have steadily gone up. It should be, the Berkshire Hathaway of stocks, but it's not. So how are they manipulating? I guess if there's no manipulation, what the hell's going on? Because maybe we're just simple, but
yeah. And obviously, this is just my hypothesis. So I'd say that bad actors exist in every walk of life. And if you have a place where there's a lot of money, you're going to probably have slightly more bad actors than, normal. So I would say it's something that is a semi-regular occurrence, but not a rampant occurrence, if that makes sense.
Yeah.
So it's something like every year or something you're going to hear about a couple, but it doesn't mean like every single stock out there has this going on. And there are a couple of things that I think get lost in this discussion. A lot of nuance about the value of short sellers. That there is a value of getting information, particularly when it relates to things like fraud or just really busted business models into the market. I think that that's important when it's not being done in a nefarious kind of way. And yes, I think that particularly in this arena, where there's a lot of egos and a lot of people who feel untouchable and have a lot of money, I think there's a lot of skirting of rules. And frankly, there's a lot of stuff that is technically legal. And Wall Street guys and gals, but I call them guys, sorry if the pronoun thing, like I'm not trying to be disrespectful, just easier for me, that the Wall Street guys tend to be really smart. And so they find like whatever set of rules like the dopey people in Congress come up with, sometimes with their help, they're going to find a way to be like, well, here's my loophole of why I've made it legal. And frankly, sometimes there's actually a good reason And it just gets abused from time to time, or it goes too far. Like, I know dark pools is something everybody's been talking about. Like, is probably a good reason why, from a block trade perspective, like, you don't want high frequency traders like tanking a stock because they see like a block trade going through. But at the same time, now it's gone past that. Like, that's not the only use of them. And so it's kind of gotten out of hand. So you have to kind of rein it back in. And obviously transparency is a good thing. So it's trying to find like the right mix of all of that, which I think sometimes is difficult. Even with the conflict of interest, I talked about this on a podcast the other day. You know, you don't want there to be conflicts of interest, but at the same time, you don't want morons to want to be in charge of regulation. So when you have guys who, you know, worked on Wall Street or worked in hedge funds and they're making tons of money, like, as the regulators, like, you're going to need to pay them a crap ton of money in order to incentivize them to not have that conflict of interest. Otherwise, they're not going to give it up, because we certainly know that, like, the person sitting in Congress or your parliament or whatever it is isn't going to be smart enough to do that. So it's about being really strategic and thoughtful about, like, what are all the sides of this, and, you know, what are the issues. And then the other thing I will say, because, you know, I'm a long-term investor, I'm not a trader. I don't trade in and out of things. I take a very long-term view. By the way, it's been really difficult, as I said, as valuation has gotten disrupted and figuring out the right things to do. So I'm not following technicals. I'm not following momentum. I'm just kind of saying, like, 5 years from now, like, which companies do I think have a good thesis and are going to be continuing to take market share? That's kind of my thing. So for somebody like me, these day-to-day anomalies that happen with trading, for the most part, end up washing out. So it really affects the traders more than it affects the investors. And I'm not saying that it's not wrong, and I'm not saying that it's not something that should be looked into. I'm just saying, in terms of, like, thinking that everything is rigged and manipulated, if you take the long-term view, these kind of little idiosyncrasies do tend to kind of come out in the wash, other than the, as I said, almost $8 trillion that the Federal Reserve pumped in, which is a separate thing. So I think, you know, it really is about identifying, you know, where are the couple of instances where this is happening. And I mean, certainly it seems like you guys have nailed it in a couple of these places with GameStop and AMC, and saying these are the places we see is not right. I mean, I did this on a very different scale back in 2012 and 2013 around a company called Herbalife, which is a multi-level marketing company. And Bill Ackman, who I'm sure you guys all know from your research, big hedge fund guy, which, again, I have nothing personal against him. He's made some interesting investments. But at the time, he came out against Herbalife, and he had this huge presentation and went through this whole thing and saying that it was fraud. And my perspective, it's multi-level marketing, and I get why people don't like multi-level marketing, but that's not fraudulent, it's not illegal. And frankly, if somebody's never been an entrepreneur, I'd rather them spend, you know, $30 on an Herbalife kit than $300,000 of their 401k opening up a business to find out that they're not good at entrepreneurship. So it's like an easy way to test the market. And he was doing something that I felt morally wasn't okay. I felt like he was using his resources to try to come down and bring additional pressure, not based on the company's position, but because he had a vendetta. And so I was a very early person. I don't do a ton of stock recommendations, but I recommended the stock. I wrote op-eds, and I, you know, kind of did that. And then Carl Icahn jumped in, and I'm sure it had nothing to do with me. I'm sure it was the fundamentals of the company, not that I'm taking credit for Carl Icahn or anything, but he took the other position. And then eventually Ackman gave up the fight, and I haven't really checked Herbalife because we sold off our position a long time ago. But it was the same kind of thing where it was like, okay, this isn't right. And so I'm going to go in and make a stink about it. So obviously it wasn't like a coordinated thing, but like, had it been today, I would have been like, okay, Ape Army, here we go. Because yeah, it wasn't right. And so every once in a while, those things do happen. But for every one of those, there's also some short sellers that expose a ton of fraud and do things. So you just have to be careful Not all hedge funds are bad. I actually sit on the board of a hedge fund, but it's a private hedge fund. It doesn't invest in the stock market. It invests in private companies and real estate and finance companies. But not everybody who's wealthy is bad. Not everyone who's a hedge fund is bad. Not everybody who's a short seller is bad. So I think bringing nuance into the discussion raises the level of the discourse and makes it clear, okay, this is what we're trying to focus on. And I really feel like there's a point of collaboration here. I really feel like if and I'm gonna just keep saying it, like if some of these big guys could just wake up and go, oh my God, this is amazing. Like I'm gonna retire to my 12 islands, here soon. Like so great to see this next generation coming in. Like I feel like it's a win-win. So I'm gonna keep trying that.
If they could just settle for 11 islands and give us one, we'd be happy.
Right, exactly. It's just not, and here's the thing. It's like, I said, I don't even think I think it's like, you can still have 12 islands and they'll have an island. Like that's the thing. It's not a zero-sum game here, even though selling a stock you may see as that, but the reality is as more capital is available in the market, it funds more innovation grows and drives the economy. I mean, this is how our economy has grown. This is how we've taken capitalism to bring, something like 80% of the world's population out of extreme poverty in the last 50 plus years. Maybe, whatever, like that's how that's happened. So this is a win-win proposition and everyone can do well. And so that's the take that I'm just not getting. It's like you're not losing anything else by somebody gaining, and it's that mentality that's actually destroying the opportunity for everybody.
Be careful, you're sounding a little socialist yourself right there.
No, definitely not. Definitely not. It's all about free markets. About free markets.
But even like when you talk socialism, you talk capitalism, again, those are extremes, right? Like we look at things, they're on a spectrum. When I teach social studies, we're talking about everything's on a continuum, right? It slides and there's different aspects of each that are good. I think when you look at our capitalist system and you look at, say, a China, well, yeah, they're centrally planned. They're just more overt about it. We have a lot of central planning. It's just more covert, where you use Wall Street and use politics and you just do it where people think they have a control and freedom, but then it's really in the hands of an oligarchy almost. Look at, I'll pick on Citadel for a minute because they're a real popular punching bag, but just looking at their fund, and I don't know how accurate this is, but I looked at a couple of sources and there's something to the tune of $234 billion, something like that is what their assets they have to work with. And that's for 19 clients. They have an average $12 billion per people. We're not talking a company that has 1 million customers with that. That's like a billionaires club. And yet they have this market maker status that allows them to run about 70% or more of all retail trades through that company, their branch. So they have a hedge fund branch and they have a market maker branch. And we're going to pretend those two don't talk to each other or use each other for their own benefit. And it's, less than 20 people that are getting rich off us. And I think when you look at that system, and we talk about transparency, Ben Bernanke works for them. He used to run the Fed. If we got, right? There's your
what did I say?
Exactly.
This is like a rotating cast of
right.
too. So
the SEC, like they're
SEC chair went to Morgan Stanley, Geithner,
right?
Treasury went into private. Yes, this happens over and over again. This is no surprise here, folks, right?
Right. That's the stuff that makes the apes go ape shit.
We're
going crazy saying like, how can this be okay? How can a system pull the leaders, the politicians, the head of enforcement agencies, what's their incentive to enforce the rules strictly or give them harsh punishments when they know my golden ticket is if they like me? And if I retire from here making my 60, 70, whatever $1,000 a year job and I go there and make a couple million or a couple 100,000, of course you're going to stay friends with them, right? And I think until that stops, we don't have enforcement. We just have a sham, and that's a big part of the problem, right? And man, I think you've had a long day, and I don't want to keep you. I just have a couple more questions. I think like it's just so fascinating, and you talked about why wouldn't they want us to know? Why wouldn't they want us to be part of this and educate us and help us level that playing field themselves, like just to make the market stronger and bring more people in? Well, I think you've probably seen The Wizard of Oz, right? Like They don't want that curtain pulled back. And it reminds me of the emperor and having no clothes, right? Like it's all these sycophants around. And I think one of the most disillusioned things, I feel like I was so naive before, like even months ago, where I thought, when I hear Americans especially talk about the media, don't trust them in the mainstream media, right? And I go, I think maybe the only person I trust now is Charles Payne, and he's on Fox, and I never thought I'd be a Fox fan. But
by the way, just a shout out, Charles Payne's longtime friend. He's been advocating. This isn't like a new thing he's jumped on. He's been advocating for the little guy forever. He's a fabulous man.
Well, that's a great match, because I've seen all these other media report, like every day. I'll just type in AMC News, and we could have had the company raised $2 billion, and the balance sheets look good, movies are doing well, the share price is going up, and it's always bad. AMC stock rallies, but they can't break 60. AMC, it's always a negative spin. And
let me give
why?
you some insight in there, because I've been in the media for 12
Sure.
years in various capacities. I'm like media adjacent. So just to be clear, people keep saying like, oh, you're a great journalist. I'm not a journalist. I've never aspired to be a journalist. I'm a pundit, which means I give my own opinion. They don't tell me what to say. Sometimes I get in trouble for the things that I say, and sometimes I get kicked off networks. But like whatever, like that's just that's just how it is. But you have to remember, so the media is a business as well, and unfortunately, they're at the point where a lot of them are like not journalists anymore. They're activists. So you've got the activist piece, and then you've got the business piece, which is for clicks. And so what happens is most people, like if you put out a positive story and you put out a negative story, the negative gets all the clicks and the outrage and blah, blah, blah. And then the positive one, they're like, oh yeah, I agree with that. That's nice. And so if you constantly click on the negative stuff, like don't be surprised that you're going to constantly get negative stuff put back at you. And this is like a big learning. And I think the apes are fantastic. You guys have been sharing a lot of stuff that's really positive, and I would encourage you to continue to do that. And just don't click on the stuff that's negative, because that's giving them, that's capitalism, that's voting with your dollars, and that's telling them that this is the stuff that brings traffic to their website and gets their clicks and rates up. So like if the more that you can stop doing that, that's what drives the issue. I mean, part of the issue I have, and as I said, I'm super well known. I have a New York Times bestselling book. I've been in the media forever. Like I'm having trouble getting people to cover this book because they're like, yeah, I don't know that anybody cares about small business. Like, what does that say? It's the backbone of the worldwide economy, but like people don't click on the small business stuff. So like click on the stuff that you want to see more of, and you will get more of. Part of the reason why I've been able to convince these different media outlets to let me talk about you guys and write about you guys is because you've been gracious enough to support and share. And so as long as you support and share, they're going to continue to go, oh, okay, well, like it does well, so we'll do it. But the second that stops, they're not going to hear about this anymore, because it's not important enough from their standpoint for them to care, and it's not driving revenue. So they're just not going to cover it. So that's the media piece of the equation. And I'm not saying anything that anyone else in the business who's being truthful wouldn't say otherwise.
Well, recently you're on Matt Cora's and you did an interview there, and you said the Ape Movement should be more specific. They have to, don't just say everything's corrupt and we want change, right? We have to be specific. So, I mean, I've thought of a few things, and not just me, there's lots of people talking about them, but the DTCC. So it's a private corporation. It's run by the prime brokers and the hedge funds, and it's also overseeing all of our trades and securing our stocks, and it does everything. It's like probably the most powerful organization in the market. So why is it private? Why are the very companies that are benefiting the most in charge of it? And would it be better, dare I say, if the government took control of it, or what would be better? Like, would it be, because be careful what you wish for, right?
Right. So it's funny. I had this discussion on the Bull House podcast that we just recorded, and it is like the two sides to the coin. So, as we talked about earlier in our discussion, Neil, is that you want the smartest people with the inside information who understand the mechanism to be the ones who are overseeing this. However, those are the people who have the experience, are on in the inside, and are making like money hand over fist. You cannot let the government do the government's the worst option, because then you still have those same people buying off the politicians, and the politicians are dumb. So like you've got like, it's like literally the worst option. So it's like, what could you put in place there? So one thing is you could just pay them a frick ton of money, right? So like if you're going to oversee this, we feel like this is an important job. We know you're going to lose out on like, I don't know, pick a number, 10 million, 20 million, I don't know what it is a year. So like, we're all going to agree that we'll add a little bit more to the costs of trading because we want more transparency. We want to have a good guy at the top. Yeah, but again, you're still not going to get over the fact that like these two guys go out and have beers and are golfing, but like maybe that helps. Maybe there's like maybe you can convince people to bring a retail panel on, or have a small guy have a seat at the table and make the case, always, you know, from their perspective, what's in it for them, to let you guys have a seat at the table. But this is where the whole regulation thing gets very tricky. It's that no good deed goes unpunished. It's that, you know, rein in the banks that gives them free rein during Dodd-Frank. It's all these things. You just have to be careful and strategically think through, if I'm asking for this, like, do I end up with something worse? And that becomes an issue as well. So I feel like those are the things that this is a super complicated thing that I haven't like spent hundreds of hours like playing around with, just kind of spitballing here, but get people in the industry to kind of talk through things and like see if you can come up with a proposal that you go, yeah, okay, maybe it doesn't perfectly solve the problem, but we're all human beings, so like human nature is always going to come into play. What's the best case scenario? And we understand every once in a while there's probably going to be something that's still a little because that's just the way life is.
Like the heart of this movement is the millennials, right? And this younger generation, and they're a social generation. And I'm not really a part of it. I'm just a wannabe, I guess, that I've been in teaching high school for a long time. So maybe I've never really grown up, but they'll put their bowel movements on social media, right? Like everything is transparent. And so for them, this is the antithesis of what they are, right? We're closed doors, we're private meetings, we're in these clubs and backdoor deals. And they're saying, no, that's not good enough with our money. Like, we're the next generation that is going to work our asses off. And if we're going to put our money in this market, we want it to be safe. We want it to grow. We don't want to be robbed blind. And yeah, the stock market's risky, and you're going to lose some, you're going to win some. There's no guarantees. You can't go, oh, I always want my money to grow, right? You invested in the wrong company, it's going to go down. But that whole idea that it's set up by these old boys club, old boys, old girls, any kind of club.
No, it's really an old boys club.
Right, it is. It's old white guys, right? Like, so, and the fact is that, like, we just want that transparency. It's like, okay, you can operate the DTCC however you want, but make the building made of glass. Like, we want to see it. We want to know how it works. Yeah. Explain it to us. Because once we know, like, there's a lot of things going out there, Reddit, wherever I'm going, that's not true. That's not accurate. It sounds great on YouTube, but it's not true. Like,
that's exactly my point. Yeah. It's like, if they just bridge the gap, like, I just feel like a lot of this would settle down and there could be a collaborative effort. So, you know, I'm hopeful that happens. But yeah, I do think transparency is a good thing. Competition is a good thing. Transparency is a good thing. These are the basic tenets of free market capitalism. And, you know, it has served and benefited everybody when we've moved closer to that. So let's see if we can take those basic tenets, and even if you can't solve every problem, let's solve a couple of them so that people feel like they're getting a fair shake. Because at the end, I mean, I don't think that's a ridiculous or difficult thing to ask for, right? You're putting in your money, you want to understand it better. And frankly, the whole thing has been unnecessarily obfuscated. Like, there's no reason. A lot of this stuff isn't that complex, but it's made complex, kind of like you said, because, you know, they want to make it seem scary and mystical, to like be like, oh, I'm a genius, and like that's just not the way that the world is moving. So I think, yeah, come up, spend some time, get some people together, brainstorm, and just don't rush to anything. Like, you know, this isn't a problem that's going to get solved overnight. So like, okay, come up with a proposal and then workshop it. Like, what are the unintended consequences of our proposal? like, how could this go awry? Is that worse than what we have today? And is there something else that we could put in place? And I feel like if you just keep iterating, and online forums and these like social connections, and you've got people all over the world and different age groups with different experiences, and get a couple of sympathetic people who have a little bit more experience to like run things by, feel like eventually you can land on, okay, this is something that we're solid. And so like as a group, we've kind of agreed this is the first thing that we'd like, and go from there.
And that would be great. And really working together would be the dream. It's sort of right now, it's a war, we're enemies, but realistically, we want people that really know the markets and know their way around it to work with us and teach us and learn if only we can trust them, right? And so when you see companies that you love being attacked sort of maliciously, like you talk in your book about, the big businesses getting this special status where they're going to be able to stay open and make money, where the small businesses are going to go out of business, hundreds of thousands of them. And it's by that token, certain hedge funds, certain groups decided to make a play on, instead of recovery stocks, they're going to rebound, so we're going to invest when they're low and wait for them to rebound, and then they'll do well and we'll make money. Like, that's the recovery play to me a normal person makes. Is the company is good, we want airlines and movie theaters, and these are good things, so we want to support them and want to invest in them. So now that they're cheap, let's buy them. They did the opposite. They said, oh, now that they're cheap, let's short them into the ground. And so we don't ever have to pay back our shorts. And, and that's the thing. If AMC goes bankrupt, which they were close, they were really close, they'll make billions. So going back, one more thing, and I've got to let you go. I mean, you've been fantastic, but I know you've had such a long day. I feel for you. So the idea of having an ID system, I think it was one of Biden's campaign managers, he's a senator maybe now, I think, he suggested it. And I thought, why wouldn't my stocks have a certain ID number like a blockchain does, or anything in the electronic world? When you send an e-transfer back and forth, there's going to be an identifier. Like, why does AMC have 500 million shares and they're not numbered, and we don't know who has which share, which one was shorted? Why, like, rehypothecation is such a huge issue. Like, I can short a share to a person, and then someone else can short that share, and someone else can short it until we have 10 synthetic shares. And yet we have a share count saying that's not really happening. But really, if we had ID numbers, we had some way of actually tracking individual stocks in a computer system that can high frequency trade like millions in a second, why can't we do that? Or is it just a case of we can, but that would really mess up liquidity, the holy grail of the market, right? Like, and we just can't touch it.
I think it's actually an easier question, because I've been talking to some of my hedge fund and short seller friends and things like that. And my synthesis, and this again, just a hypothesis, I could be completely wrong, is that I just think because there's no financial incentive to do so, like most of the people aren't asking for it, and it would be really expensive to change the entire way that things are done and routed in the like biggest market in the world. So I don't think that it's necessarily nefarious. Yes, there's probably some benefits, on the fringe to not doing it that way, but I think that nobody sees the financial reason to do it and to spend like the incredible amounts of money. And then, as we know, as every technology is developed, everything else has to kind of catch up to it. So, there could be huge disruptions and dislocations just because like it's new tech, and we didn't solve for this, and now like all of a sudden this is happening. So it's just like, if it's not broken and we're not really seeing like a major benefit, because they're not seeing transparency in a financial term, like why are we doing this? And so that's my guess, is probably why that hasn't happened. And not to say that it won't. I just think prove the case. The best way to win anybody over is what's in it for me. So if you can prove the case to them why it's good for them to have this level of transparency, you're going to have a better time enacting change than just saying, no, like we don't like the way it's done.
Yeah.
That's just, and by the way, in any walk of life, personal, professional, whatever.
Yeah, definitely. I mean, I guess I wish I could, but I'm guessing it's not good for them. And that's probably the truth of it. Like, if you were to go into a parking lot at Walmart and, just look at, any kind of vehicle that's the same as yours, and just pop in whatever one you wanted, would you do that? No, you'd look for the one that had your license plate, right? Like, it's just kind of how we do things. When you buy products, you have, you know, it's yours or it's someone else's. But
right. But it does make it easier if you think about it. So it used to be like I had like a paper share that had my name on it and stuff. And then you have to get like consent forms, like, oh, well, this is literally your share. So if this one doesn't get settled, do I get screwed versus somebody else? Like, you know what I mean? Like, so that's where the other side of it is like this crap is super complicated and there's a lot of different parts. So there's a reason why we went to street name, so that I just know my stuff has like insurance where I parked it with my broker. And like, if something doesn't get returned or settled or whatever, like they're going to make it up and figure it out. And I don't personally have to deal with it. You know what I mean? So that's like something that you want to be real careful about. Cause like, I know none of us would want to be, cause by the way, again, big guy versus little guy, whose account do you think they're going to lend out of first, right? They're going to lend out of yours and mine and not the big guys, right? So like, there's always going to be a downside. So again, that's why I like thinking through really carefully, like, do you really want your share to be the one that's lent out? So that's kind of, so like not having it trackable just makes it easier and puts the burden with the people who are making the market to make things right. And frankly, as a consumer, I would rather that. That's just easier for me, and I don't have to worry about that aspect of it. Not to say again that there aren't other ways that we should be getting better transparency, but that one, not so hot.
All right. So parting thoughts. What advice would you give to the Ape movement at this stage? Is it a critical stage? Is it a non-issue? Is this going to fizzle out? Like, we had Occupy Wall Street. We've had the Ape movement. It seems like we keep replaying these protests over time, you know, the class warfare in a way. Like, us little guys, they're struggling to make ends meet and make our mortgage payments against people with 12 islands. Like, so what next? Like, what, are we doing this right? Are we crazy? Is this even winnable, or is it just a fad? And Wall Street will win because they always win, because the government has their back. The Fed's just gonna fund them and we just can't compete. Or is there something we should be doing and focusing on that can take this to another level and make sure that the momentum keeps going?
Yeah, I mean, it's up to you guys, right? I mean, that's either the movement will continue or not if you decide to keep it going. I mean, that's just, you know, when you have a lot of decentralized people, everyone has to decide that, you know, it's worth it and continue to work on it. So that's the decision point. Continue to educate yourself. Continue to diversify your holdings. I think, you know, AMC is great, GME is great. Continue doing what, you know, whatever makes sense for you guys. But, you know, think about, you know how it is. Like, there's a finite like value in theory to different companies. There are a lot of underrepresented companies because the big guys, you know, they have so much money to put to work that they can't really be bothered with like some of the smaller companies. Last year was a record year for IPOs. People paid attention to very few of those. So like, do your due diligence. I looked at a company and invested in it a couple weeks ago that was trading at 4 times cash flow. Like what? And it had just gone public and nobody was talking about it. And then they announced earnings and it popped like a huge pop, and it's like still like flitting around. But like, I expected it'll probably double over the next year or couple of years. Again, it's not to the moon, but I'm looking for long-term risk-adjusted returns, not total returns, as part of my investment strategy. And I think as you guys broaden out your portfolio, have those discussions, start researching other stocks and figure out, get, you know, different groups that are supporting different entities that you believe in, because there's a lot that, especially on the smaller end, that just never doesn't get the lip service on TV because it's not big enough for anyone to care about, doesn't get the big dollars because there isn't enough money in terms of, you know, if it's got a $500 million market cap and you've got like, you know, billions of dollars you're putting to work, like it's just not going to fit your investment thesis. So I would continue in terms of building your long-term wealth, that's an interesting place to start. So keep, having those discussions and sussing out the value gems, if they're, to the extent valuation ever comes back into this market as a thing, you might have some ideas there. And then, as I said, I would just get really specific, like really, really workshop one idea, maybe two. Like feel it out, test it from every direction. When you're super solid, go in with that, one or two things, and then go in, eventually, like, I know this is born out of hate and spite in some ways for people who are doing nefarious things, but know that there are a lot of people out there who aren't doing nefarious things, that are just not paying attention. And I think that eventually the best way to get their attention is going to be building bridges. And by the way, I'm not just putting the onus on you, I'm putting the onus on them to do that. But I think eventually there's a tremendous opportunity here. And as I said, it's win-win. And so from my perspective, the more people who are educated about wealth creation and can participate in it and build it, and you're still going to have a 1%, right? Like, somebody's still going to be at the top, which is fine. They're going to make different choices to get there, as long as the rules of the game aren't tilted in their direction. So keep getting educated about those kinds of things, and do everything you can to keep spreading those messages.
Perfect. I think, like, you said it all and then some, and I really appreciate it. And the book is The War on Small Business: How Government Used the Pandemic to Destroy the Backbone of America. I know already, just look at the table of contents, I feel like, I'm thinking about new things, so I can't wait to get my hands on it and read it. I really appreciate your time today, and look forward to seeing you. I've been seeing you doing the media circuit. I've been learning lots. So thanks very much for your time.
No, thanks, Neil. And if you're just finding out about Neil because I reshared this or whatever, I think you did a really good job. I know this is a new endeavor for you. You asked a lot of really thoughtful questions. You're in the right place. So kudos to you, and thanks for reaching out, because that's another thing, right? You got to take a shot. Like, you probably were like, I don't know if she's gonna email back, and it's like, yeah, I'm gonna take the time and have this conversation. Those are the kinds of things, and not everybody's gonna be gracious, but you put yourself out there and you find the people who are, and you run with it.
Well, I think if more people did this and reached out like you have, and took the time to listen, that would be a lot further ahead in the economy and in the markets and all this stuff that's happening right now. So hopefully that's the spark, and we'll see more of it. Thanks again for your time, and have a great day.
All right. Thanks, everyone. Bye.